You're welcome to the Economy and Politics Conversation. I'm Ottoabasi Abasiekong. Robust financial market infrastructures have been described as the cornerstone of 21st century financial markets. Financial market infrastructure hinges on systems, mechanisms, and institutions that ensure a smooth outcome in financial market transactions. With geopolitical realignments and digital disruptions, the African regional capital market ecosystem has enormous potential to pull its weight as the last frontier for global capital formation. At the heart of vibrant capital markets are efficient Central Securities Depositories, recognized as the custodians of financial market infrastructure. This edition of the conversation will discuss repositioning Africa's financial market infrastructure to attract global liquidity. I engaged Mr. Haruna Jalo-Waziri, the CEO of Central Securities Clearing Systems Plc, who is also the Vice Chairman of the Africa and Middle East Depositories Association. Watch the interview. It's great to have you in this conversation.
Thank you. Always good to be here.
Let us begin by understanding how critical are Central Securities Depositories to the depth and liquidity of capital markets, especially in Africa.
So the first thing I tell you is that markets need trust. Markets need a system to ensure that settlement and clearing is done as and when due. Markets generally need custody, and market infrastructures typically provide that. So they take away and eliminate risk from a settlement perspective, risk from a custody perspective, and eventually, build that resilience for markets.
Tell us how AMEDA and the Africa Exchange Linkage Project have been working to achieve cross-border securities transactions seamlessly.
Exchanges compete. So what they're trying to figure out is, when they do that connectivity, how does order flow not go away or liquidity not go away from the exchanges? Now for the CSDs, because we don't compete, the landscape is a little bit different. So you find CSDs interoperability level of collaboration is quite high, and they allow the platform to connect to each other, because we're not sharing liquidity, rather we're improving processes and removing risk from markets. So you see that happen. However, again, we support the AELP program, because as CSDs, at the back end of those exchanges, we need to also collaborate. It's not working as fast as we thought it would when I was at the exchange, but I think some effort has been going on to ensure that those linkages are going to happen effectively. But as for AMEDA, we are fully supportive of those linkages, but just even beyond Africa, because this is an Africa and Middle East association, and so we're reaching out to other regions within Middle East to actually partner, even beyond the AELP, program. So yes, we support. We're looking forward to the success of that program.
And then when you look at the digital framework now, we have these assets really on board. How are you strengthening that framework, risk management, to ensure that cybersecurity is at the forefront? You also anchor cybersecurity conversations. How is that taken at the front burner for the African markets?
So solutions on the digital asset side, custody are key. Again, I mentioned things about trust. So encryption is at the highest level. And those solutions tend to provide that trust element that it is. If you look at most of the things that have happened within the digital asset space, what is very critical is safety and security of the instruments. And at the CSCS, we had, in advance, actually invested in our solution that is actually going to be able to do digital assets when it does come, because the custody of that comes with the highest level of encryption built by TCS banks, and so once the exchanges begin to organize themselves, certainly CSCS will be ready for that. And in many cases, we're also talking to them to help them facilitate those products to be launched as quickly as possible.
Take a look at policy and regulations. What are those concerns that AMEDA would like to be addressed across members to enhance clearing and settlement? I know you talked about the need for it's time for inclusivity and resilience in the market.
So I think most of our concerns earlier on have been addressed by the ISA, which has just been passed. Something as simple as LEI, which is legal entity identifier. Because before, it wasn't compulsory for us to have an LEI as part of KYC for institutions, but this new law has taken care of it, in the sense that across the world, once you have an LEI, you don't know the institution that's actually making that investment. that kind of takes away the tensions that would have across markets, because I think the issue of LEI came because of what happened in 2007, 2008, and part of the recommendation then was that LEI should come. I'm looking forward to the implementation very quickly.
Mr. Waziri, as we wrap up, of course, you talked about the ISA 2025. It's a game changer. How will this position CSCS and, of course, a seamless framework whereby you can onboard more young investors? You've talked about the youths coming on board. Demography has not been so good. 53 years. We want to have a younger demography.
So funny enough, that data I started sharing at that time, and we're looking at that data again to see, because some of the data was incomplete in terms of don't have date of birth in many cases. We started populating all those ones now, so we have better, cleaner data. I suspect that number is coming down, but once we get it ready, we publish. But the CSCS has always been ready for digital onboarding. If you heard Bamboo earlier today, who said they have 1 million customers. We had started the API, we built the APIs, we built the connectivities, but because CSCS doesn't onboard clients, we don't do KYC. What we do is give them the platform for the intermediaries to go ahead and do that, which is what Bamboo and Co have done. Certainly, we're ready. We are waiting for the market to adopt what we built. So, like I said, we're ready.
So the ISA is indeed a game changer, and CSCS and of course platforms like AMEDA are ready to work to improve integration, boost inclusivity, and transform the market.
That is the purpose and intention. And if you see the theme of discussions that are going on right now at AMEDA, those are the keywords we're all using.
And so we hope to see more liquidity attracted to the market.
Hopefully, certainly.
That was an interesting conversation with Mr. Haruna Jalo-Waziri, the CEO of Central Securities Clearing Systems Plc. A major takeaway from this conversation is the prospect for utilizing emerging technologies like artificial intelligence and blockchain to achieve a robust financial market infrastructure in Africa and the Middle East. I'm excited by the conversations about the financial market infrastructure in regions like Africa and how they should consider inclusivity, targeting women, youth, and the SMEs. With innovation partnerships like several initiatives the CSCS PLC is adopting with some fintech companies, the market should witness the onboarding of a new class of investors, changing the landscape of the average investor in the capital market from the current median age of 53, which is long overdue, to a young demography. It is all about best practice, emerging technologies, increased access to the market, and real-time products that positions the African financial markets to attract global liquidity, and the time is now. To our viewers, if you want to get further insight on this conversation, visit the ProShare website displayed on the screen and follow our social media platforms to engage further. Until we come your way again, enrich yourself with knowledge of socioeconomic developments around you. It is wise. I'm Ottoabasi Abasiekong. Thank you for watching, and bye for now.